Okay, July 20th. We're 5 minutes into market open. I do not really know what price is doing right now. We had this massive 1 day bullish flag. You'll see it on the 1 day, 4 hour, and 1 hour. And on NQ, we've swept the lowest point of that bull flag. So we've taken out the sell side liquidity of this bottom trend line for this bullish flag, and that liquidity being on June 9th and June 11th. We've taken it out, and I've seen this pattern kind of carry out. Like we don't want to pattern trade, but you can't help but recognize that for a bullish flag, what price will often do is that before it has its main impulse move to the upside, for that bull flag to carry out, it'll take out sell side liquidity so that it could generate liquidity and create a bullish momentum, right? So it will often do that, but I'm not sure if you see it on the 1 day and we have 3 1 day continuation candles or a fair value gap in between, take out the lowest point, that's a lot of selling pressure alone. Do we have enough buying pressure to fill this inefficiency here and continue upwards, taking out last week's high and taking out this high over here from June 2nd, right? That's the question. Can we do that? Luckily, we're not taking a trade that's 1,000 points, 1,500 points. We just want to get in on a short move, but it's still important for us to determine a daily bias. So for that daily bias, here's what I found. In relation to this low right here and even this low, NQ has taken it out. NQ has swept this sell side liquidity, whereas ES has not. Just to kind of explain, ES in terms of price hasn't even taken out this high, let alone this high. So ES is treading somewhere around right here. So we have a bullish SMT divergence on the 4 hour. Obviously on the 1 hour, you'll see it on any time frame. And not only that, ES is clearly showing more buying pressure. So that's important to note. We have a 4 hour bullish SMT at this key level, while on the 1 day time frame, price on NQ has entered this 1 day bullish fair value gap. And I'm actually going to mark it because that's pretty relevant. That's a massive fair value gap, especially with us entering that fair value after taking out these lows. That is a lot of buying pressure. So now we're thinking, okay, what is our confirmation for entering? We had this SMT created in an overnight session, right? So 6 a.m., actually 6 a.m. Friday, so last week. We had that created. We have 22 minutes till the 10 a.m. to the 4 hour candle for 6 a.m. to 10 a.m. closes. That candle could close above this. It could absolutely invert this bearish fair value gap, which at that point we can look for long entries and a retracement on the 15-minute time frame. That's an option. But let's assume that we're looking for a clear, let's assume we want to follow the sequence of AMD, right? And this will happen every morning. Price will want to accumulate, it will then want to manipulate, and then it will then distribute. So accumulation can just look like consolidation. Accumulation can happen in pre-market. It could also happen in post-market. Post-market meaning New York session. Then it will manipulate the highs or lows. It'll manipulate the buy side or sell side of that accumulation, generating liquidity, and then it will distribute in the same direction as price accumulated or in the opposite. And that's for us to determine, which is often influenced by what our daily bias is. And our daily bias is tricky to determine right now. I see this change of character that happened on Friday at 11 a.m., which kind of tells me that after price entering this 1 day bullish fair value gap, we had a large impulse move to the upside, taking out the prior high. I think then, hence, changing character. So my daily bias is bullish. The tricky thing about that is we are in a bearish confluence, a massive one on the 4 hour, and we just entered one on the 1 hour. And this is the kind of trade where I'm going to have to adapt, right? Although my daily bias is bullish, there might not be a trade for us bullish. And even then, it's is our daily bias really bullish? Because market just opened within this bearish fair value gap. So again, although we see a bullish SMT divergence, that does not necessarily mean that our bias is bullish or that we're taking long-term, or like that price is long-term bullish for the rest of the day. That price would even close out bullish. It could mean that, but oftentimes what it means is that price is going to retrace into a discount zone so that it can find equilibrium with its correlating pair, that being ES. So it's going to find a balance and equilibrium with ES and NQ. And for that to happen, an SMT will be created, or that happens because an SMT is created, and then it will find its equilibrium by retracing into a discount zone and then continuing in the dominant direction. So in simple terms, SMT, price will retrace into a discount zone, such as a 4-hour bearish confluence. I mean, it makes sense perfectly in that context. Like if this one-day bullish fair value gap wasn't here, I would be very confident in shorts. But SMT, discount zone, and then continuing in the dominant direction would be here. That's what would happen, right? SMT, find its equilibrium, enter a discount zone, continue in the dominant trend direction. So that is the kind of like structure that I am expecting if we're taking shorts. Now, if we're taking longs, I do want to see a clear manipulation to the sell side so that I can take an entry. I'm not going to enter a continuation when the market opened bullish off of a bullish candle and we're just going to piggyback off of that. No, I need to see a retracement. I need to see price manipulate to the sell side so that I can enter a long trade so that other retail traders like me can enter long. And a decent point for that might be this intermediate low right here from this 1-hour bullish fair value gap. But if not, a lot of times if there's a lot of buying pressure, you might just have to look for it on the 30-minute or 15-minute. And that's a possibility, right? I mean, one key level would be this right here. And the reason why is because we have this 15-minute bullish fair value gap right here in this 3-candle sequence. We had this 1 wick enter it, and that 1 wick is resting right below London highs. Now, that's a lot of liquidity. If price were to come down here, take out London highs, take out this intermediate low while staying within the stop loss of this 3-candle sequence, and then coming up. That is a possibility. I just don't know if price wants to retrace that deep. I think there's a good chance, so that's kind of where I'm going to keep my eye out for. But it becomes tricky when you see price manipulate to the downside. Is that a sign to enter long, or does that mean that we're respecting this high time frame bearish confluence that we're in right now, this red zone? That's what becomes tricky because you have contradicting factors and you have to try to figure out how to enter. And a lot of times the only way you'll know how to enter when you have two conflicting factors is which one is providing you a real entry, which one is showing your edge, right? Like you can identify, like it's not that difficult to identify your strategy, assuming that, like, let's say, what's my strategy if I'm taking longs? What's my strategy if I'm taking shorts? I basically just said it. But what we'll kind of confirm to you is that only one of them, only shorts or longs, will provide your real entry. And my entry is going to be obviously price manipulating, entering a key level, and then for showing confirmation, it's going to invert a low time frame fair value gap. And if that's a bullish fair value gap, we're going to invert a bullish with a large bearish candle closing out below the second candle in the sequence, and vice versa. So that's kind of what we're looking for. Yeah. What I would like to see, actually, what would be ideal is if at the end, when 10 a.m. hits and once this candle closes on the 4-hour and the 1-hour, they both close at the same time. If the candle body closes above the candle open of this second candle, so if it closes somewhere up here, full close, not just wick, candle body closing above this second candle, then we are inverting this bearish candle. We're proving this bearish candle to be weak in its strength, invalidating it, confirming longs, and then once we see that, all we have to look for is like a medium time frame re-entry, which we might find on the 15-minute for price to just close out up here, retrace into here, we enter longs, and then we target a 1-to-1 ratio, continuing in the new dominant trend direction. So that's what I'm looking for. I think we're gonna have to wait till 10 a.m. to find a real entry. So I'm gonna pause and resume then, because right now all we have is just this large 15-minute, what's about to be a 15-minute candle. Okay, so the 4-hour, 1-hour is closing in a minute 30. If it closes like this with the candle body below the wick of this intermediate high right here, then I think I'm taking shorts because that is a full respect of this intermediate high and this bearish fair value gap, especially if it closes within the wick of the prior candle. Actually, no, that's the only way. The candle body needs to close within the wick of the prior candle. Otherwise, this would be somewhat considered continuation. So I do want to see that. If it does that in the next minute, then we are looking for shorts. Yeah, we're going to have to look for shorts. What I want to see is us invert a bearish, or sorry, a bullish fair value gap. Honestly, if we close within this, below this candle right here, I'm ready to take shorts. Take immediate short entries. My risk to reward, that's a lot. Yeah, we're only have to trade 2 micros. I'm thinking, is there like a retracement?
Order filled.
So. I think that's it. Us inverting this bullish candle right here. That's a 5-minute invert. Also a 3-minute invert. 2-minute invert. Because at this level right here, there's not much else. Like, sure, we had this sure we just grabbed this liquidity, and it seems kind of unconventional to take a short entry when we grab sell side liquidity, but it's like you have to understand that the 4-hour candle closed with the body below the wick of the prior candle. This is a full respect of this intermediate high, this bearish fair value gap, and the prior candle. A lot of selling pressure. This 1-minute candle, clear wick off. So I like shorts here. The question here is like, when do you enter shorts? And with the 15-minute candle body closing like this, we're looking for us to have an intermediate. Sorry, we're looking for us to inverse a bullish fair value gap, and this is not one of them because it was already tested and respected. So the one after that is all the way down here. This could be a take profit point. So all we're looking to do is now compare it to the 5-minute and look at prior price action and think, okay, this was a very clear 5-minute bullish fair value gap that was not tested, which we had this candle body slam right through. This one had a wick off, this one slammed right through. The second it closed, waited to see how we would react at this key level, saw we were steady, entered shorts, 2 micros, stop loss. Because we have this kind of price action here, like this is a pretty long continuation sequence for these 3 bearish candles, and the point differential is pretty high. So 2 micros, I guess, was sufficient. I could have honestly done 1 micro, but our stop loss for 2 is right there, and then our take profit would be right here. We've got a 1-to-1 ratio, and I will resume once we've hit TP or stop loss. It's 11:45. We've stopped out. Yeah. Took right around break even at this point. At 11:30 a.m. onwards till 1 p.m., that is pure chop. Low liquidity. Can't expect price to hit my take profit target, especially since we were this close before, and for some reason we didn't want to take that 1-to-1 or that intermediate low resting right here, which I thought at the very least will hit 1-to-1 because of the intermediate low, but didn't do that. Break even, and that's today's trading day.